All right, so you guys have been hitting us up asking a lot about, the future of finance.
Mm,
And to be honest with you, one of the most fascinating areas and potentially one of the most disruptive is stablecoins.
for sure, for sure.
So today we're going to do a deep dive into exactly that, stablecoins, and their potential to, like really reshape the entire banking industry.
Yeah, it's a conversation that I think is uh, absolutely critical right now to understand where digital assets are going
Right.
and their impact, I think, on traditional finance.
Absolutely. So, okay, let's kind of like get everybody on the same page here.
Okay.
What exactly are we talking about when we say stablecoins? So think of them as like a type of cryptocurrency,
Yeah.
but with a really key difference. Unlike the crazy price swings that we see with Bitcoin or Ethereum,
Right.
stable coins are really designed to maintain a stable value,
Yeah.
and usually they're pegged to like a traditional currency like the U.S. dollar.
Yeah, that price stability is really kind of the key differentiator. And there are a couple of different mechanisms by which that's achieved.
Right.
The most common type is what's called fiat-backed.
Okay.
And this means that for every stable coin that is issued, there are supposed to be reserves of, traditional currencies like dollars or euros or whatever held in reserve
Got it.
to back that.
Yeah, and I think that's supposed to be is something we'll probably
Yeah, we're going to unpack that.
we'll unpack that a little bit later.
Yeah, for sure.
Then there's also crypto-backed stable coins.
Right.
So in this case, the collateral isn't fiat currency, it's other cryptocurrencies.
Exactly.
And these are often over-collateralized
Hmm.
to kind of protect against that, volatility
Exactly.
of the underlying crypto assets.
You got it.
So there's a little bit more, I guess, safety built into that.
Yeah.
And then there's the third kind, which is algorithmic stablecoins.
Right.
So these are a little more complex. They use smart contracts and adjustments in their supply
Right.
to try and, maintain their peg without relying on like the direct asset backing.
Right. Yeah, so it's essentially trying to achieve that stability programmatically
Right.
through algorithms rather than through a one-to-one backing.
Got it. Okay. So it's kind of a diverse landscape of different approaches.
Yeah, it is.
But I think what's really been interesting to watch is just like the massive growth in stable coins.
It's been huge.
We're talking about going from, just a few $billion in like 2020
Right.
to over 220 billion
Wow.
by early 2025.
That's a massive increase.
I mean, that is exponential growth.
It is.
That really says something about the demand that's out there.
Yeah, it really signals a strong appetite for these stable digital assets.
Exactly. And it's not just the total value.
Right.
We're seeing trading volumes for stable coins
Yeah.
have actually overtaken even like Bitcoin and Ethereum.
It's true.
So like Tether's USDT, for
Yeah.
example,
USDT. Yep.
it plays a massive role in like facilitating trades
Yeah.
within both of those ecosystems.
Absolutely. And it really highlights how important stablecoins are within the crypto world itself.
Exactly.
Yeah.
Okay. So that's kind of like, the landscape. But now what's really, I think, capturing everybody's attention is the regulatory landscape.
Yeah.
And this is where the Genius Act comes in.
The Genius Act.
It's got quite a title.
It chuckles. It does have a rather grand title.
The Guiding and Establishing National Innovation for United States Stablecoins Act.
Yeah, it's a mouthful.
So at its core, this is really landmark legislation in the U.S.
Yeah, I think landmark is a good word for it.
that aims to establish a comprehensive regulatory framework specifically for stablecoins.
Mm-hmm.
So this isn't just like, a fringe topic anymore. This is like, real movement towards potentially bringing stablecoins into the mainstream financial system.
Yeah, absolutely.
And you mentioned that this could even like be a model for other countries.
Yeah, I think that's the potential, given how influential the U.S. is in global finance. The way that it chooses to regulate stablecoins could very well set a precedent for how other nations approach it.
Right.
And it's particularly interesting that the act emphasizes the ability of different systems to work together
Okay.
and cross-border cooperation.
Got it. Okay. So that kind of like sets the stage.
Yeah.
So really what we want to do today in this deep dive is kind of like unpack, really what are stablecoins all about?
Yeah.
What are the implications of the Genius Act?
Right.
And then really trying to look ahead and see, how is this all going to reshape banking, not just here in the U.S., but globally?
Exactly.
So I want to give you a really clear, insightful overview
Okay.
of what's happening here.
Sounds good.
So let's start by looking at some of the advantages that stablecoins have
Okay.
over traditional banking.
Right.
What are some of the things that really make stablecoins stand out?
Well, one of the biggest benefits that people point to is the potential for much faster and cheaper cross-border transactions.
Oh, yeah.
Think about like international wire
Ugh,
transfers.
it's the worst.
It's slow. It involves multiple intermediaries,
And the fees.
and it can be really expensive.
Oh, my gosh. Yeah.
Stablecoins, on the other hand, offer the promise of near instantaneous settlement across borders,
Right.
and often at a much lower cost.
Much lower.
Yeah. So that increase in efficiency
Right.
could be a real game changer for businesses involved in global trade
Yeah.
and for people sending remittances back to their families overseas.
Especially if you're trying to send money quickly, or if the amounts are smaller,
Yeah.
the fees can really, eat into what you're trying to send.
Exactly.
And then there's also the fact that they're available 24/7.
Oh, that's a big one.
I mean, our lives are increasingly, digital
Yeah.
and global.
Right.
The idea that you can, move funds anytime you want. You're not limited by, bank operating hours
Yeah.
or, different time zones.
Right. It just makes sense in a world where everything's becoming more digital
Exactly.
and more interconnected.
Okay, so we've got that 24/7 availability.
Yeah.
What about, we always hear about the unbanked and the underbanked,
Right.
billions of people around the world.
Mm-hmm.
Do you think stablecoins could potentially be a solution to bridge that gap?
Yeah, I think that's a key area where they could have a really profound impact.
Okay.
For people who don't have access to traditional bank accounts,
Right.
for them, a smartphone with an internet connection
Yeah.
could become their gateway to basic financial services through stablecoins. And
Yeah,
this could be really transformative in developing economies
Right.
and in remote areas where, traditional banking infrastructure is very limited.
Got it. Okay, so really interesting in terms of accessibility.
Yeah.
Okay, what about transparency?
Mm.
Because blockchain is kind of, it's almost synonymous with transparency.
It is.
How does that play into stablecoins?
Well, most stablecoins operate on public blockchains, which means that every transaction is recorded on this publicly accessible ledger.
Okay.
And this inherent transparency allows for, easier auditing.
Right.
It can reduce what we call counterparty risk.
And what is counterparty risk for people who don't need?
Counterparty risk is the risk that the other party in a transaction won't fulfill their obligations.
Got it.
So with stablecoins, at least in theory, you can actually track the movement of funds
Right.
in a way that you just can't with traditional banking.
So more visibility.
Much more visibility, exactly.
Okay.
And then also, for those fiat-backed stablecoins,
Yeah.
the reserves that are supposed to be backing them
Right.
can also be monitored more easily,
Okay.
which, we talked about that's supposed to be.
Right. Exactly.
So that adds a layer of accountability there.
Got it. Okay. And then finally, you mentioned programmability through smart contracts.
Right.
What are some practical implications of that?
So this is where things get really innovative.
Right.
Smart contracts are basically self-executing agreements. Right.
That are written in code on a blockchain.
Got it.
And stablecoins can be seamlessly integrated into those contracts.
Okay.
This enables things like automated payments
Right.
that are triggered when certain conditions are met,
Wow.
or even more complex decentralized finance protocols.
So that's where we get into DeFi and all that.
Exactly. DeFi is a whole other, rabbit hole we could go down.
Yeah, definitely a topic for another deep dive.
Absolutely.
Okay, so we're talking about faster and cheaper transactions.
Mm-hmm.
We've got 2047 availability.
Yep.
We've got the potential for greater financial inclusion,
Right.
enhanced transparency, and then, this whole realm of programmable money.
Programmable money. Yeah, that's a powerful concept.
It's a pretty compelling picture.
It is.
So let's look at how they're actually being used today.
Okay.
What are some of the key use cases right now?
So one of the most significant uses currently is within the cryptocurrency trading ecosystem.
Okay.
Stablecoins have become very important.
As a kind of safe harbor during periods of market volatility.
Yeah, because it gets crazy in there.
It does. It gets really wild sometimes.
Right.
And so when the price of Bitcoin or Ethereum, is fluctuating wildly,
Yeah.
traders can quickly move their funds into stable coins to kind of preserve their capital
Right.
without having to cash out completely.
Right. So it's like a de-risking mechanism within the crypto space.
Exactly. There's a way to kind of park your assets
Right.
in something stable.
Without going back to regular dollars.
Exactly. Without having to go back to fiat currency,
Right.
which can be, more time consuming and costly.
Okay, that makes a lot of sense.
And then beyond just acting as a safe haven,
Right.
Stablecoins are also the lifeblood of many applications in what's called decentralized finance.
Right.
DeFi, exactly.
Like how?
And decentralized finance aims to kind of recreate traditional financial services,
Okay.
like lending and borrowing and earning interest,
Right.
but in a way that's completely decentralized.
So without like the banks and all that.
Exactly, without those traditional intermediaries.
Right.
And stablecoins are essential for these protocols.
Right.
They provide a stable unit of account,
Mm-hmm.
and they allow for lending, borrowing, and yield generation to happen.
So you can like lock your stable coins into smart contracts
Exactly.
and earn passive income.
You got it.
Okay, that's pretty cool.
Yeah, it's been a big draw for a lot of people.
DeFi definitely a topic for another deep dive.
For sure.
But we talked about cross-border payments earlier.
Mhm.
Are stablecoins actually being used for that in a meaningful way right now?
They are increasingly being used for international payments and remittances
Okay.
because they're faster and they're cheaper
Right.
than traditional methods.
Right.
The ability to send money across borders almost instantly and with much lower fees
Right.
is really appealing.
For both businesses and individuals.
Absolutely. It reduces all that friction and cost that comes with the traditional systems.
Okay. And then you also mentioned this idea of micropayments and programmable money. Where are we seeing that in action today? Or where do you think it's going to go?
I think the Internet of Things is a big one.
Okay.
Imagine all these devices
Right.
needing to make tiny payments.
Right. Like tiny little
payments.
like fractions of a cent.
Exactly, fractions of a cent.
Okay.
So you could have like an autonomous vehicle paying for charging at a station.
Oh, wow.
Or smart appliances automatically reordering consumables when they run low.
Right.
Stablecoins are really well suited to do that because of the low transaction costs and the programmability.
Okay.
So it could unlock all these new business models.
Wow, that's like a whole different world.
It is.
Okay, so we've got all these advantages. We got some really interesting use cases. Now let's talk about this Genius Act.
Okay.
What's the fundamental goal of this legislation?
So the main goal is to balance innovation with financial stability. They want to encourage innovation in the digital asset space,
Right.
but at the same time, make sure that the broader financial system remains safe and sound.
Right. So how do they do that? What are some of the mechanisms in the Act that make that happen?
Well, one of the most important things is that they're going to set strict standards for stablecoin issuers.
Okay.
So they're mandating reserve requirements.
Okay.
Which means that stablecoin issuers have to hold a certain amount of high-quality liquid assets to back the value of their stablecoins.
Okay.
And they're also requiring regular independent audits to verify that those reserves are actually there and that they're sufficient to meet any potential redemption demands.
So this gets back to that whole supposed to be thing?
Exactly. It's putting teeth behind it,
Yeah,
making sure that those reserves are actually real.
Got it.
Another key element is that they're going to create a licensing regime.
Okay.
So if a company wants to issue stablecoins, they're going to have to get a license. And there are certain criteria they're going to have to meet, like minimum capital requirements, cybersecurity protocols, and sound corporate governance structures.
So this is like bringing a lot of legitimacy and structure to the stablecoin market.
Yeah, it's bringing it out of the Wild West and into a more regulated space.
So it's like, there are rules of the game now.
Exactly. There are rules of the game.
Got it. And then the Genius Act also really emphasizes consumer protection.
Yes, consumer protection is a key focus.
Okay.
They want to make sure that users have clear information about how the stablecoin is backed, the process for redeeming it, and any risks that are involved. And there are also safeguards to protect against fraud and market manipulation.
So it's really trying to build that trust.
Exactly. Trust is paramount.
Okay. So how does this approach to regulation compare to what we already have for like traditional financial products?
So the Genius Act is taking a more nuanced approach. It's drawing on established principles of financial oversight. But it also recognizes that stablecoins and blockchain are unique.
It's a different beast.
It's a different beast, exactly.
Okay.
So they're trying to tailor the regulatory environment to fit this new technology.
Got it.
Rather than trying to force stablecoins into existing categories that might not be a good fit.
Okay, so you mentioned the potential for the U.S. to become a leader in this area of digital asset regulation. So how does the Genius Act position the U.S. on the global stage?
Well, by establishing this really comprehensive regulatory framework,
Mm.
the U.S. has the potential to set a benchmark for other countries
Ah,
who are also trying to figure out how to regulate stablecoins.
right.
The Act emphasizes things like interoperability,
Okay.
which is the ability of different stablecoin systems to work together
Got
and
it.
cross-border cooperation.
Right.
And these things could encourage a more harmonized global approach to regulation, which would be really important for facilitating the use of stablecoins in international transactions.
So it's kind of like setting a precedent
It is. It's setting a
for
precedent.
the rest of the world.
Yeah.
Got it.
Well,
Okay. So the impact of this act could be huge.
it could be huge.
Okay. So let's talk about the impact on some of the key players in this space.
Okay.
So first, the stablecoin issuers themselves.
Mm.
What kind of changes are they going to have to make?
So for them, the most immediate impact is going to be adapting to those stricter licensing and operational standards
Right.
we talked about.
Right.
They're going to need to build really robust compliance frameworks.
Okay.
They're going to have to make sure they have enough reserves
Yeah.
of those high-quality liquid assets.
Right.
And they're going to have to be much more transparent in how they operate.
So it's a lot of upfront investment,
It is.
but potentially big rewards down the road.
Yeah, in the long run, it could lead to greater legitimacy, more trust from users,
Yeah.
and wider adoption.
Okay, so it's kind of like a maturation process for the industry.
Exactly. It's a maturation process.
Okay, what about traditional banks? How are they going to be affected by all of this?
So for banks, there are both opportunities and challenges.
Right.
The Genius Act could open up ways for them to enter the stablecoin market.
Okay.
You know, they've got all this infrastructure. They've
Yeah.
got a huge customer base.
They've got the experience.
They've got experience navigating these complex regulatory landscapes.
Right.
So all of that could be really valuable in the stablecoin space.
Okay.
We might see banks start issuing their own stablecoins
Wow.
or offering custody services
Okay.
for existing stablecoins.
So they could become really important players
They could be key players.
in this stablecoin ecosystem.
Yeah.
Okay.
Huh.
But it also sounds like a lot of change.
It is a lot of change and adaptation.
Right. They're going to have to figure out blockchain technology.
Right.
They're going to have to adapt their risk management practices. Yeah.
And they might even have to overhaul some of their operations.
Yeah, because it's a whole different way of doing things.
It is a different way of doing things.
Okay, and then you mentioned reserve requirements and asset management.
Mm-hmm.
How are those going to change both for stablecoin issuers and traditional banks?
So both are likely going to need to hold higher levels of liquid assets.
Okay.
Stablecoin issuers will need those reserves
Right.
to back their tokens.
Right.
And banks that are dealing with stablecoins
Yeah.
will also probably face increased scrutiny from regulators
Okay.
about their own liquid asset holdings.
So it could impact their profitability
You could.
and their asset allocation strategies?
Absolutely.
And then what about the competitive landscape? I mean, how's that going to be affected?
Well, I think this act is going to increase competition
Okay.
and innovation.
Got it.
Banks are not only going to be competing with each other,
Right.
they're going to be competing with tech companies,
Right.
fintech startups,
Right.
and even decentralized finance protocols
Right.
that are offering stablecoin services.
So like a whole new set of competitors.
A whole new set of competitors. And
Right.
this could be the thing that finally pushes banks to really embrace digital transformation.
Yeah, like they're going to have to get with the program?
They will. They will.
Okay.
Yeah.
So the Genius Act sets up this framework,
Mm-hmm.
but who's actually going to oversee all of this? Who's going to enforce these new rules?
So the act puts a lot of responsibility on both federal and state regulators.
Okay.
They're going to be the ones supervising stablecoin activities, making sure everybody's complying with the rules,
Right.
and really safeguarding the whole financial system.
So we're talking about agencies like the SEC,
The
the CFTC,
The CFTC, yep,
and the Federal Reserve,
the Federal Reserve.
all playing a role in this.
Absolutely, they'll all have roles to play.
And the act will probably lay out how they're going to coordinate
Exactly.
so that it's not like, everybody's doing their own thing.
Right, they need to be on the same page.
Right. Okay. So what about enforcement?
Mm-hmm.
What happens if a stablecoin issuer doesn't play by the rules?
Well, the Genius Act is expected to have some pretty strong penalties.
Okay.
There could be financial fines,
Right.
and they could even lose their license to operate.
Wow. Okay, so they're serious about this.
They're serious. They want to make sure everybody's playing by the rules.
Okay. And we've talked about how easily stablecoins can cross borders.
Mm-hmm.
So how does the act address like the international aspects of regulation and enforcement.
It really emphasizes international cooperation.
Okay.
They want U.S. regulators to work closely with their counterparts in other countries
Mm-hmm.
to come up with harmonized standards
Right.
and to share information.
Got it.
Because if you're not coordinating internationally,
Yeah.
it's going to be very difficult to regulate something that's so global.
It's like herding cats.
It is a bit like herding cats.
You can't just do it in one country.
Exactly.
Okay. And the technology is always changing.
Always.
So is this framework set in stone, or is it going to be able to adapt?
I think they built in some flexibility.
Okay.
It will probably be reviewed and assessed regularly to make sure that the oversight mechanisms are still effective as things change.
So it's like a living document.
Yeah, it's a living document.
Got it. Okay. So let's shift gears a little bit and talk about how stablecoins might be integrated into like everyday banking.
Mm-hmm.
You know, the kind of products and services that people use all the time.
Right.
What might that look like?
Well, we could see things like stablecoin-based savings accounts.
Okay.
These would blend the stability of traditional banking
Right.
with the efficiency and the potential for higher returns
Okay.
that we see in blockchain.
So you could get like, you know, the best of both worlds.
Potentially the best of both worlds.
You get the security of traditional banking,
Mm.
but the speed and the efficiency of crypto.
Exactly.
Got it. Okay.
We might also see investment products that incorporate stablecoins.
Okay.
So fund managers could use them to give investors exposure to the crypto market,
Right.
but with less volatility.
So it's like a way to dip your toes in.
Exactly. A way to dip your toes in without taking on as much risk.
Right.
And then, of course, there are payment systems.
Mm-hmm.
This is an area where stablecoins could be really transformative.
Okay.
Banks could revamp their whole payment infrastructure
Yeah.
to accommodate stablecoin transactions.
Mm-hmm.
And that could lead to near instantaneous and much cheaper payments,
Both domestically and internationally.
both domestically and internationally.
So that would be a huge upgrade.
It would be a huge upgrade.
Okay. And then you talked about these hybrid financial instruments.
Right.
Can you give us some more concrete examples of what those might be?
Sure. So imagine things like stablecoin denominated bonds
Okay.
or loans where the collateral is a mix of stablecoins and traditional currencies.
Right.
We could even see derivatives
Mm-hmm.
that are based on stable coins. These hybrid instruments would basically connect traditional finance
Right.
with decentralized finance.
This is like blurring the line.
Blurring the lines, exactly.
Okay. And then what about foreign exchange?
Oh, yeah. Foreign exchange is another area that's ripe for disruption.
Yeah, okay.
Stable coins could really streamline currency conversion
Yeah.
and potentially reduce the need for all these complicated correspondent banking relationships.
Oh, right.
So we're talking faster, cheaper, and more transparent foreign exchange services.
Wow. Okay. So savings accounts, investment products, payments, foreign exchange.
Yeah,
I mean, it sounds like a lot of areas of banking could be really transformed by this.
they could.
Okay. So for the banks themselves, what are the opportunities here?
Well, they could make money by issuing stable coins.
Okay.
They could provide custody services.
Mm-hmm.
They could manage stable coins for other people.
Right.
And they could even get involved in stablecoin lending and yield generation.
So they could actually become active participants
Yeah, not just bystanders.
in the stablecoin ecosystem.
Exactly.
Okay. And then what about their internal operations?
Well, they could really improve their liquidity management
Okay.
and their treasury operations.
Mm-hmm.
Because stablecoin markets operate 24/7.
Right.
They would be able to allocate capital more efficiently
Right.
and settle transfers much faster.
Got it. Okay. So that's pretty significant.
Yeah.
And then you also mentioned stablecoins could help banks expand into new markets.
Right. They can make it easier for small and medium-sized businesses to do cross-border transactions,
Okay.
and they could also facilitate cheaper remittances.
So reaching new customers?
Exactly, reaching new customers.
Okay. And then you also mentioned that banks could become kind of gateways to the crypto ecosystem.
Yeah, they could offer on-ramps and off-ramps
Okay.
between fiat currency and stablecoins.
Well, hmm.
And they could provide other crypto asset services
Okay.
like custody and trading.
Got it. So it's a whole new world of opportunity for them.
It is a whole new world.
But it's not going to be easy.
No, it's not going to be easy.
So what are some of the operational and risk management changes that they're going to have to make?
Well, they're going to have to adapt their compliance and AML procedures to
Okay.
handle stablecoin transactions,
Right.
which will probably mean using blockchain analytics tools
Okay.
and updating their KYC processes.
And then it's a whole different set of tools and technologies
It is a whole different set of tools.
that they're going to have to learn.
Yeah, they're going to have to get up to speed.
Okay. And then what about just the underlying technology itself?
Right. They're going to need to invest in new infrastructure,
Okay.
things like running blockchain nodes,
You got
developing APIs,
Right.
and potentially even upgrading their core banking systems.
Right. So it's not like they can just, flip a switch.
No, it's a big undertaking.
It's a huge project.
It is.
Okay. And then what about risk management?
Yeah, risk management is going to be a big one.
Okay.
They're going to need to develop new models
Okay.
to address the unique risks of stablecoins. Things like liquidity risk,
Okay.
counterparty risk,
Right.
and the operational risks of blockchain.
Right. So it's a whole new set of risks
Yes.
that they're going to have to think about.
Yeah, they need to be prepared.
Okay. And you also mentioned potential shifts in their balance sheets.
Right. As they start holding stablecoins
Yeah.
and maybe issuing their own stablecoins,
Right.
their balance sheets are going to look different.
Got it. Okay. So a lot of changes on the horizon
A lot of change,
for banks.
for sure.
Okay. So we've been talking about the U.S. a lot,
Right.
but what's happening in the rest of the world?
Mm-hmm. Host.